welcome back to the channel. In today's video, we're going to go over how to identify outside bars. All right, and if you're unfamiliar with what an outside bar is, it is when a bar takes out the high and the low of the bar before it on its respective time frame, whether it's the day, the week, or the month, right? In strat terms, it is when a 2 becomes a 3. All right, and so last week I was able to identify the outside day incoming on SPY. And because I was able to identify the outside day incoming, I knew where price was going to go. And so I was able to get a limit entry off of a TTO / retracement. Right here, I have 0.35 out, got filled at 0.35, and that one went to 1,000%, right? SPY dumped pretty hard on Thursday. So a lot of people started asking, inquiring how I was able to identify and how did I know the day was going to go outside, right? So I figured I would take or make a little presentation for you guys and go over some of the criteria that I have on a little checklist when I'm trying to gauge outside bars or candles, all right? And so these are the three main things that I pretty much kind of gauge when I'm looking at potential outside bars. So number one is time of trigger and reversal. Number two is time left in the candlestick. And then number three is price movement needed. All right. All of these things all correlate to each other. They're all connected. All right. Just like it's like time of trigger and reversal. When did we trigger? And when did we reverse? And so that one plays into number two, where how much time is left in the candlestick for the reversal to continue. Right? And then number two plays into number three, how much price movement is needed for the reversal to continue and take out the other side of the candlestick range, right? And in order for that reversal to continue and take that out, we need to have enough time left in the candlestick. And the amount of movement needed needs to be reasonable, right? It needs to be doable for the underlying, right? And so these three things I take into account when I'm looking at a candlestick and looking at, potential outside bars on a daily time frame, weekly time frame, or monthly. Doesn't really matter, right? And so number one, time of trigger and reversal. A trigger, or what I want to see is a trigger, meaning it doesn't matter whether it's 2 up or 2 down. Just we want to see the 2, right? We want to see a 2 trigger. For our example, in this presentation, I'm going to use 2 up, meaning we're taking out the high of the previous bar. But it does not matter if it's a 2 up or 2 down. Just don't think that's a factor, right? So again, what I want to see is a trigger, a failure, and reversal early into the 2 up trigger on that candle in relation to its time frame. All right, and so what that means is on a daily candle, we want to see the 2 up trigger, and we want to see it fail and reverse within the first hour of the day to be safe. All right, it could be the second hour of the day ish, maybe even third hour of the day sometimes. But to be safe, you want to see it within the first hour. Just like, all right, there's check that off. On a weekly time frame or a weekly candle, you want to see the trigger and reversal on Monday. It can happen on Tuesday, but again, to be safe, I like to see it happen on Monday, because if I see a trigger and reversal on Monday and then Tuesday we continue reversing, then I know we still have Wednesday, Thursday, Friday to take out the other side of the range, right? If we went 2 up and we reverse, I know we have 3 more days to take out the lows. Same thing for the monthly. We want to see a trigger and failure / reversal within the first week of the month, because we know there's 3 weeks left for price to continue in the opposite direction, right? We want to see the reversal continue, right? And you want to have enough time, and you want to see the reversal early into the trigger, because you can kind of tell price is automatically rejecting yada yada yada, right? So this is number one, right? So time of trigger and reversal. On the month, you want to see it within the first week. Better probability if you see it within the first 3 to 4 days. That's me thinking, all right, we could potentially go outside month. On a weekly time frame, we want to see it trigger and reverse on Monday, maybe Tuesday, all right, because we still have Wednesday, Thursday, Friday to target the opposite end of the price movement. And that's on a weekly candle. On a daily candle, you want to see the trigger and failure / reversal within the first hour of the day, because you still have the rest of the day to target the opposite end of the range, right? So number 2 is time left in the candlestick, and this one plays into number 1, right? When was the trigger? When was the trigger and reversal? And then how much time is left in the day, the week, or the month to allow the reversal to continue, right? So number 2 is time left in candlestick. How much time is left in the candlestick to allow it to take out the previous lows or highs within that same candlestick timeline lifespan, right? And that's a little bit of an overcomplication. It's basically how much time is left in the candlestick for the reversal that we see here to continue and take out the opposite range, whether it's the high or the low of the candle before it, right? And so that's why I say, number 1, we want to see the reversal failure very early, because it gives number 2 a lot of time for the reversal to continue in the opposite direction, right? We want to take out, whether it's the high or the low, we want to take out the opposite side of our trigger, right? And so if there's enough time left in the candlestick, then I'm going to consider like, yeah, we definitely could go outside day, week, month, quarter, right? It just depends on what time frame we're looking at, right? So number 3 is going to be price movement needed. And so this one, sometimes this one can be by itself too, because sometimes this one can be out of touch with the last 2. But if we don't do number 1, I really wouldn't do it. But price movement needed means how far does price need to move to take out the previous low or high? And is the needed movement reasonable and probable in correlation to the underlying's average price movement? So after we take into account number 1, all right, we triggered, let's say we're looking at a weekly. We triggered 2 up on Monday, and then we reversed on Monday. Cool. There's check mark number 1. Number 2, how much time is left? Well, damn, we have Tuesday, Wednesday, Thursday, and Friday to try to take out the opposite end of the range. Now, how much does price need to move to take out the opposite end of the range? This is when you got to go into the specific stock and kind of gauge, all right, how much does this thing move on any given day, and how much does it need to move to take out the previous low or high? All right, so for example, if Apple moves about $2 to $3 a day, and in order to go outside week, Apple needs to move about $5 in the opposite direction. If it's Monday or Tuesday, I consider potential outside week. If it's Wednesday, Thursday, Friday, then that's not probable, right? That's not the best example. All right, let me get out of here and show you a real life example of one that I'm looking at right now. So right now, I'm looking at Ford to potentially go outside month. All right, let me take all of my drawings off. Right, so this top left is the month. This right side is the 2 week. This bottom left is the 1 week, and this bottom right is the 1 day. Right down here. So I am considering, again, this is the monthly right here, top left, right here. So I'm considering we could potentially go outside month this month, right? Number 1 off my checklist already was that we reversed within the first week of, actually, this one's a little tricky because we had the month and the weekly kind of combined, right? But what I see right now on Ford is that it is February 12th, right? So we still have 1 week, 2 week, about 2.5 weeks left in the month, right? And I can see we are already failed 2 up on the month. We have already reversed quite some time. Significantly. We're to the point where we're, how much space from here to there, it's about $1, about $1.20 or something, right? So for me, number one off the checklist is cool. We got the reversal within the first week of the trigger, which is kind of here. This one's a little iffy, but we got the reversal within the first week, all right? Now I'm taking into account how much time is left in the candlestick. And I want to see this go outside month. So I'm looking at the monthly. And so how much time is left in the monthly candle? We have 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12. We have 12 days left in this candlestick's lifetime. All right. Now, number 3, how much does price need to move? How far does price need to move in order to take out the previous low, which is right here? All right. So the previous low is right here, 1157, right there. So right now we need price to go below 1157 to take out this low and to turn this 2 into a 3, because this will now be an outside bar, right? It'll go like that. I mean, it will look like this, right? It'll take out the high and low of this one bar right here, right? So where's price right now? Price is at 1273. And the outside month is at 1157. So 1273 minus 1157. Let's do that math. It is 1.16. All right. So we need Ford to move $1.16 to the downside in order for this monthly candle to go from a 2 to a 3, right? Now, is that attainable? Well, let's do the math, right? How many days do we have left? We already did that. So that's 5, 10. We have 12 days left. How much does Ford usually move on any given day? Let's check. I'm looking at the high and the low differential here. So 1290 to 1250, about 40 cents. 1310 to 1260, about 70, 50 cents. 1280 to 1250, about 30 cents. 1270 to 1220, 50 cents. All right, so you see a little pattern, about 50 cents a day. Let's look at it on the weekly. How much does Ford usually move in a week? High and low differential right here. 1393 to 1251. That is about $1.40. 1460 to 1278. That's about like $2, a little less, $1.90. High and low again right here. 1337 to 1243. That is about $1, let's say. 1285 to 1204. That's about 80 cents, right? So we can kind of get from looking at price, right? Ford moves about $1 a week, give or take, right? 50 cents a day, $1 a week, 40 cents a day, $1 a week, right? Now go back. How much? This is number 3, right? Outside bar checklist. Price movement needed. So we need $1.16 movement out of Ford to go outside month and take us below 1157 right here. All right. How much time is left in the candlestick? Well, let's see. We have 12 days, right? And we already saw time of trigger, right? Time of trigger and reversal. That's already out the door. So now we're looking at number 2 and number 3. And so me coming to a consensus, I'm thinking, all right, we need Ford to move $1.16 in 14 days or in 12 days. And Ford can do that in about 3 days. And so me taking that into account, I'm going to say we can definitely go outside month this month, right? We still have a lot of time. So we can definitely go outside month this month, right? So now that I have that in the back of my head, what I want to see price do next is confirm for me that we are still reversing. And so next week, I want to see price break below previous week's low and do something like this. or at least do something like this. All right. I'm going to try to get a TTO entry, or I don't know. We'll see what happens. But what I want to see price do next week is break below about 1238. And that will even like, I will probably be for sure, we're going outside month. And we're going to target 1157. And since I know that's our target on the month, I know I can go into the options chain, you know, work those cons, blah, 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 right? And so that's how I come to the consensus that I think Ford has the potential to go outside month because we already triggered and reversed within the first week of the month. We have 12 days left for Ford to move $1.16. And I know Ford can move about 50 cents a day. And so that could technically only take 3 days, 4 days. And we have 12 days or left into the in the trading month. So all those things, you know, put together, I'm thinking that's not outlandish. That's not impossible. And so now when price presents itself to me next week, if we do end up breaking below here, then I'm definitely getting in and I'm going to short this motherfucker all the way down to the outside month. All right. And that is it. All right. So that's my outside bar checklist. Ford is a first person example of kind of how I'm gauging it. I do know about the 50% rule, but that's kind of like something that I take into account after all of these things have already been looked over for me personally. All right. So yeah, that's going to do it for me, guys. I hope that helped out. I hope that helped you guys get a sense of how I'm gauging these outside bars. For me, the ones that I really pay attention to are the daily, the weekly, and the monthly, and the quarter, right? Anything lower than the daily time frame, like the hour, the 4 hour, it's not really that impactful for me because I'd rather see where price is going on a broader range, right? The day, the week, the month, and that gives me a better sense of a bias going into how I'm going to gauge the price action. Like with Ford, I am biased to the downside right now because I think we have the potential to go outside month. And so if I see downwards movement, that's going to confirm my bias, and I'm definitely going to trade that, you know, because, you know, trade what you see and not what you think, right? But yeah, that's going to do it for me, y'all. I hope that helped out. Please hit that like, subscribe, notification. Follow me on Twitter, Instagram, YouTube, whatever. And then I do have a private Discord group that I do my daily watch list, trades, entries, blah, blah, blah. So if you want to fuck with us over there, the link is in the bio. But yeah, that's going to do it. Hope that helped out. And I will see you guys in the next video. All right. Peace out, bro.